Hey everyone, JJ at microefutures.com, and I just wanted to share with you something that we've been experimenting with, and it's been working quite well. A lot of people are, getting really caught up trying to capture a big move, and it's a little bit difficult, and chasing big moves is hard. So say you miss this big short on the way down from 38.48. Well, if you're a new trader and you're trying to be consistently profitable, here's a way to capitalize on some nice trading after a move has happened. And this way it takes the stress off of you. So for example, the market sold off from 38.50 all the way down here to this 38.04 level. And what happens in markets is after a move down, shorts will come in and start covering and stabilize the price. Long traders will establish a long position, wholesalers, size traders. And then what they'll do is they'll cut the supply or stop selling, and the buyers will come in and it'll allow them to sell this up here. So what you simply do now is after that move down and back up, you look for an area of balance. So I look for a high and a low, right? And what I do is I look to see if we go above that high, do we come back and hit that low, right? And then if we break that low, if you double that balance zone, you'll see that this 38.12 area is kind of the middle of the position. So what you can do is if we break out of balance and we can't get to the middle or even the double of that zone, and gee, VWAP's right there, you can short 38.24 against VWAP, cover at each level down, right? And say, if you short on the move up into balance and that fail, well, when you break and come down to 12, you're coming right into that area of cost basis, the position of the wholesale traders. The supply shuts off and the market rebounds. This way, what you can do is you can take 2 to 4 point trades back and forth in these balance zones, right? And your risk is limited because, say you were short here, your stop is just above VWAP or at VWAP, right? So you're not risking much. And if you're going long on the failure to break 16, your stop's really not that bad. You're not going to risk that much. And your 16 to 20, 20 to 22, that's a nice 2, 3, 4 point trade. You can trade very nicely and make 2 to 3 points on a trade. Now, this isn't glamorous, but if you make 3 points a day on a couple of E-mini contracts, it soon adds up into income. And our goal is to trade for income, right? And to trade in a manner that we're not going to get stressed out, have ulcers, have heart attacks, because people are always trying to chase these big moves, and they're very hard to trade, right? They're very hard to trade, and a lot of the times they'll be shorting and then they'll get caught at the bottom short because they missed the short here, get stopped out, then they go long and then they get stopped out again. This way, just wait till the balance range establishes, right? Takes a little time, or let the market do its thing. Once it does that, you're going to get some nice zones that you can trade really in a simple manner. There's balance. You double the balance to the bottom to get your lower target. You double it to the top to get your upper target. And you just trade in between the zones. So we break out of balance to the downside. We were short 19.20 here, right? It came down to 18 but couldn't break 16. You cover, right? And then if you took the long, say you take a long from 18, the middle, all the way back up to 20, right? At that 9 EMA, if it can't break that, get out of your trade, right? This way it can really, really help. You can see the market now is coming down, and we'll be looking for 12 again, right? Once inventory, or the people who are, if you pick a level, now you got at least 2 hours of people who are trapped long over 16. That's why the market's selling off. Once we get rid of those longs and the large traders buy back their positions at cheaper prices, the supply will cut and the market will go back up. The other thing too is it keeps you trading in the right direction, because if we break 12 hard and come back into the original position, right, If we break 12 hard, you know that there is more supply. And trading's all about supply. Look how we came right back down, caught a bid, and we're right back up again. Hope this helps. I'll do more videos on this. But these little micro balance zones can really help us trade chop after a big move has happened to the upside and the downside. If you want to learn how to trade, make an income, and lower your stress levels and stop losing money, come join us at microefutures.com. I'm JJ. Have a wonderful day. Bye for now.